Hey everyone, welcome in to another daily editorial here on the KE Report, chatting with Dave Erfle. We're going to be talking about, first and foremost, the major breakout in silver that is now above $30 and even closed last week above that $30 level. That is an over 10-year high that we are trading at, not just a 52-week high. We also had some key moves in copper. And look, the underlying stocks, the equities are moving higher. Dave is the founder and editor of the Junior Miner Junky. Dave, first things first, silver over $30 and has not reversed right away. That I know some people might have thought that it would, but clearly there's some momentum here for silver for a lot of different commodities. What's the significance in your eyes in terms of silver moving higher, not just for the silver stocks, but for the overall commodities and precious metals sector?
Yeah, it's what we've been waiting for. We've talked about this over the last several months. Why the juniors haven't really gotten going yet, and we were waiting for that silver price to get above 30 and have a close above there and start a short squeeze. And that's taken place right now. Silver's way above 31. And the short squeeze, there's also a short squeeze going on in copper. The copper price rose to $5, and that's all-time highs. So silver still has a ways to go before it gets to all-time highs, but that 30 level was stiff resistance that we needed to close above. And also, I was talking about that gold-silver ratio needs to get below 80 and start trending lower below 80, and that's starting to happen also. So basically, what you saw going into the silver price running up to 30 again was we had a huge spike in SILJ in the volume, and that was telling us that this time that the silver price was going to break through 30. And you're seeing 52-week highs in a lot of silver juniors. But interestingly, you're still not seeing a lot of volume in GDX and GDXJ yet. But as far as the metals are concerned, it's very bullish to have. We had the gold stock, we had the miners leading the gold price, and we had silver leading the gold price. And more importantly, we had SILJ leading everything. And that's the highest risk ETF of all the minor ETFs. And that was telling us that, hey, silver's ready to break out. And indeed it did.
Well, Dave, with that backdrop where silver is outperforming gold and the silver stocks are outperforming the gold stocks, that is precisely what you want to see in a strong bullish precious metals move. But a lot of people are coming out of the woodwork and saying, hey, maybe things are getting a little toppy here, as they always do whenever things run, but they're worried about the summer doldrums. Do you think there's enough energy here, because summer's just right around the corner, for the chart action we've seen to propel these things higher during the summer, or are you worried we're going to have a cooling off period here? Do we need a cooling off period here?
The miners have gotten overbought, but we're in a bull market now. We're used to being in a bear market for quite a long time. As far as the gold stocks are concerned, we're used to being in a bear market for the past 4 years. So now we need to look at weakness being bought. But one thing that does concern me, and we were talking off mic before we started talking here, is the volume in the GDX and GDXJ have been trending lower as they've been going higher towards their ultimate targets of 51 in the GDXJ and 40 in the GDX. I think that's where their targets are. That's what the early 2022 peaks were, and it looks like that's where they're headed. But they're getting extreme overbought on a weekly basis. So we're going to need some backing and filling here. But it's going to be interesting to see once those targets are finally reached, how they're going to react once they get there. Because like I said, we're not seeing that volume in the GDX and GDXJ yet. It's receding, which is disconcerting.
But SILJ, those had volume spikes last month too. So what does this tell you about the investors that are coming in, or where this money is coming from? If it's still just us trading amongst ourselves, or the diehards trading amongst all the diehards in the sector, there is still money coming in because look at the prices moving higher. So how do you balance that out?
That's exactly right. I think the reasons why you saw such a larger spike in volume in SILJ and SIL is because the silver stocks were not only being ignored, but they were pretty much hated. And the value, that's where the real value was. And that's why you're seeing a lot of these juniors really take off and and printing 52-week highs last week because there's really not that many worth investing in as far as I'm concerned. And that's why you're seeing these sharp moves in the better quality silver juniors. But yes, I think the stock market continuing to make these all-time highs, Bitcoin reaching 70,000, that has kept the generalist investor out of this sector still. So it is pretty much still the diehards and us trading amongst ourselves, which is the reason why the volume isn't there yet.
Dave, when investing in silver companies, a little different than a gold company in that usually silver companies are polymetallic. There are very few pure silver plays that you can even invest in. So with most silver companies, you have to be willing to either have a hybrid of gold and silver, but more likely silver, lead, zinc, and maybe some copper in there, maybe some other metals. How do you filter through the different companies to try to get that silver beta and that exposure to it if it's so hard to find pure silver companies?
And that's what, and you're also seeing these base metals starting to have nice moves. Zinc's over $1.30 a pound now, and that's another reason why a lot of these silver stocks are doing well. But yeah, it's difficult to find the purest silver plays out there. And you notice that what happened with the silver royalty companies, they had to go buy metallic and add gold royalties and gold streams into their portfolio. Yeah, there's really not a lot out there that are mostly silver. But once you do find them, you also have to dig a little deeper and look at the management team and look at the share structure, look at the jurisdiction they're in, look at the timeline to being fully permitted. That's a big one right now. We really didn't have to worry about timelines to being fully permitted in the last bull market, but this is a totally different market now where a lot of investors are looking at these permitting issues and how long it's going to take to get fully permitted. So these are the optionality plays right now that are presenting the most value. You got these companies that have these long lead times to getting fully permitted, but they've got the ounces and they'll eventually get these permits, but it just takes a long time in that particular jurisdiction. Those companies are still trading at really cheap valuations.
Do you see this changing and helping these companies actually finance some of these projects? Because look, optionality, there are a lot of companies out there with resources that say they want to build the mine and they say, look at all these other avenues that we have to fund this thing. Problem is their market cap is so low that they just can't reasonably fund a full-on build. Now that we're seeing at least a general revaluation in some of these stocks, there's still market caps way under what they need cost wise to actually build these assets. Do you see that environment changing and more major funding packages coming in?
Yeah, I do. Once these market caps get higher, and like you said, it's starting to happen because a lot of these companies, their project is so attractive and they're so close to being fully permitted that they can fund the project with a lot more debt. They don't need to use that much equity, and they'll attract a streaming package also. So yes, but still, there's a lot of them that are searching for JV partners and going that avenue. So I still see that being a problem for many of them.
Dave, just when thinking about the silver stocks finally starting to move, I think jurisdiction should come into the discussion as well. I get a lot of emails from people saying, hey, I think I want to get in some silver stocks. I know you like them, but I'm concerned about Mexico. And I'll point out there's silver in Nevada, there's silver in Idaho, there's silver in British Columbia, there's silver in Ontario, and there's silver all over South America. Do you think it's good to have a diversified basket to get out of Mexico? Are you worried about Mexico? Are you fine having some exposure there? How do you look at the jurisdiction risks in silver?
Well, I've personally, I've got a lot of exposure in Mexico for myself and my subscribers, and that risk has been waning. You see a lot of these Mexican silver plays doing really well recently. They're going up after they were going up into the silver price, testing that $30 range again, and then once we had a weekly close above 30 last Friday, we saw huge moves in a lot of these Mexican silver companies. So I think it's less of an issue now, but it still is an issue. I know there's a couple that are looking to get permits real soon, and they are underground permits. It's the open pit permits that have most concern. But if those underground permits are issued, they've got an election here coming up in July. If they're issued either right after the election or right before the election, that would be huge for the entire Mexican silver play sector.
Dave, what about gold stocks then? In terms of, I know you like the more developed plays, you're not looking still at any of the explorers. What does it look like in the gold front environment in terms of the stocks that you see as outperforming and the ones that still have a lot of upside?
Yeah, there's the ones that have been outperforming are starting to be caught up by some of the laggards, but the ones that are outperforming, that they do have that access to capital. They got a strategic partner. They're closer to being fully permitted, but there's several others that have come out and maybe recently said it's going to take a little longer for us to get those permits than we thought, and or the timeline to get fully permitted is not going to be until 2027, 2028. Those stocks are pretty much doing nothing. And I do own a couple of those because I like the optionality and I don't mind waiting. But I also own a few that are starting to do really well because they are closer to getting those permits. And as their market cap goes higher, I think also many of them are looking to attract a strategic partner or more strategic partners. Some just have one; they'd like to have one or two more. But yeah, I think as the gold price rises here, we're getting to where the gold price is trying to get above 2,500. I think once the market starts to feel, hey, 2,500 is the new floor, I think that's really going to loosen up the purse strings in a lot of these deals, and a lot of these companies are going to start to get financed.
Dave, as far as the gold stocks, in addition to the developers that have a clear pathway to production and you see the takeover maybe down the way as being your exit strategy, I know you also are positioned in some growth-oriented gold producers, some of the small to mid-sized ones that really have exploration upside. Are you looking at companies that maybe have the best margins and can really capitalize on rising metal prices? Or are you looking at companies that maybe have only okay margins, but with the rising metal price, their margins increase more on a percentage basis? How are you looking at the gold producers that you hold?
Yeah, I'd much rather have the higher margin projects for sure. I do hold one company that has decent margins. I'd rather see higher margins, but they have the growth, and the stock is really undervalued, so I don't mind holding it and waiting. Yeah, it's a fine line because we're getting through Q2 here, and it certainly looks like the gold price is going to average 2,300, 2,350 in Q2, maybe even 2,400. And that's about $300 higher than it averaged in Q1. So you're going to see these gold companies have huge cash flow and much higher margins. They're going to have to start concentrating on replacing those ounces now because they did a great job of concentrating on their balance sheets and they have manageable debt. They have a lot of cash, and now they're going to have to start concentrating on replacing those ounces. And as this bull market really starts going and these miners start moving higher and investors start getting into them, they don't want to have to overpay for these juniors like they did during the last bull market when they waited till the end, till the gold price had gotten over $1,700-$1,800 before they started looking at replacing their ounces, and they waited too long. I know a lot of them have started to take these strategic positions, and I've stated before, I'd like to see a lot more of that. I'd like to see a lot more of these majors and mid-tiers take strategic positions in these juniors.
Hey, it's all moving in the right direction, right? We're not even 3 months into this bull market, which, look, it all started March 1st when gold started moving higher, silver's joined in, copper's joined in. Across the board, it's been a better environment, also in the face of markets continuing to move to all-time highs as well. So this rotation of money, at least a bit more into commodities, I think is encouraging for investors. And we're seeing share prices go up. I know it's not every stock, but it's close to pretty much every stock. And this just needs to continue, right? It's only 3 months. So this needs to be a momentum play that lasts longer than the 6 or 7 or 8 months that we've seen in the last decade. Let's hope that all continues. But right now, it does seem to be moving in the right direction. Dave, thank you as always for your time. It's great chatting with you, especially in a bull market where more stocks are moving higher. We'll chat with you again next week, Dave. Everyone be sure to click that link below. Check out the Junior Miner Junky website where you can follow along with Dave and the stocks he is buying. Thanks for your time, Dave.
All right, guys, thanks again. See you next time.